Hi, this is Randy Finney with the Right Side of the Chart, and today is Wednesday, July 17th, 2019. It is about almost 12:40 Eastern Time as I'm starting this video, and this video will be a potpourri of different charts, different things I'm watching. So we'll look at the broad markets, maybe some individual stocks, sectors, other asset classes like bonds, and I'll keep it relatively quick, kind of just brush over each thing, not go in depth on any one thing. First would be NQ. We'll start out with the broad markets. Posted several charts. I did an update this morning on the front page of the site. You can come in and check that. If you're watching the video as a subscriber, you should have already received an email on with a link to that post earlier. So check out. Remember, some of the charts may not show through on the email notifications you get as a subscriber. Any that are attached together, two or more, in what they call a gallery format, because it would just wouldn't fit well in the email. So you come into the site and check those. So the big thing is really that just about everything has broken down. Not everything, I should say. The large caps. I have SPY, QQQ breaking down below some trend lines recently, following divergent highs, but not very impulsive. You know, the market has fallen asleep at the wheel. That's the bottom line. Now, it may perk up. That's what I said before. Sometimes you have this. We are in the doldrums, which means summer months. This is when everyone's on vacation. Those kids are out of school. Trading volumes usually do drop off, but that doesn't mean that you can't have a big move in the market. So just be aware and be ready for anything. So the levels I'm watching continue to be, we have this uptrend line on NQ, the NASDAQ 100 futures, and as you can see, it was recently broken. We took it down not very impulsively, and we're just below the trend line now. The bigger level, I think, and this is what I mentioned in the update this morning, I had made a typo. I said 7,900. I meant to round down 7,900. That's the level right there I'm watching. And what that level is, it's the recent breakout in NQ. This took the NASDAQ 100 to new all-time highs. To the left of this chart, there were multiple failures. I covered that recently. They're not shown on this chart, but at that level. And we failed again here. And then finally, we broke above it, came in back tested. We back tested, and we're back testing again or close to it. So that level needs to go, and really, I think that will start the selling should accelerate or start to pick up. So to be safe, really, if you're looking for shorts on the market, or to add to a short, or take a short position. Somebody asked me about IWM, which I'll get to in a second. I said you need to see IWM make a solid break below the sideways trading range. That was also posted this morning. I'll get to that chart in a second, as well as NQ, because what happens if the large caps don't break down? Small caps, they could certainly go lower. They've been lagging the large caps. They're well off their highs, while the large caps are at or near all-time highs. But this will help seal the deal. You want to have the large caps, everything falling. It just helps anytime you're trading in broad index ETF, like small, mid caps. It just helps to see them all moving in the same direction, is what I'm trying to say. So look for that. Look for a break at that level. You can see when I go to ES, we've already broken down a comparable level. I'll zoom in like I was on NQ. This is ES, the S&P 500 E-mini futures, and you can see we have an almost identical chart. We have an uptrend line. And I've had several recently, and each of them were valid. They were just small. We've had just low volatility, broke down, had a little small correction, pushed up, and then we formed this next uptrend line, which is very similar to that one on QQQ or NQ that I just showed you. It also broke down, and then we had a almost identical support. You can see right here. This is comparable to that 7907 support I just showed you on NQ. This is 3005 on ES. And you can see we failed there, came up, tried again, failed, finally broke out, and we back tested it after breaking out, back tested again, and we broke it. So we have a pretty decent sell signal here on ES, but as I always say, ES isn't going anywhere without NQ. They are both large caps. In fact, the majority, not all, but most of the top weighted components in the S&P 500 are also the same top weighted components in the NASDAQ 100. So therefore, you're not going to see one drop 10% and the other holds up or go up at all. You just won't see that. There is some disparity day to day, but for the most part, these guys move together. And so as such, the trend has been resilient and strong. You want to give it the benefit of the doubt, wait for that breakdown on NQ. I'll look at RTY, which are the small caps ETFs. I know a lot of you guys like to trade the small caps. I haven't posted too many updates recently. Let's get rid of this trend line now. We had a little triangle, but what's happened, the bigger picture is the small caps, just like that IWM 60-minute chart I've been posting recently, I had a price target up here from all the way back here before we even broke out of this. This was my target on IWM. I'll get to that chart in a second. We hit it, and with a very brief and temporary overshot, and then we've been moving sideways in a very tight, completely sideways trading range here. Just bouncing up and down between that level. We had a little whipsaw breakdown today, but it was a brief whipsaw. We snapped back up, and again, somebody asked me this in the trading room who was short IWM via the TZA, something about that, and I said, here's the thing. When you are trading this one, what you want to see, if you're going to add to the position, or let's say take an IWM short, you want to see an impulsive breakdown. We did break, but again, it proved to be a whipsaw signal. Snapped right back up to the channel, and you want to see that NQ breakdown as well. I think that will increase the odds. If NQ breaks that support and you start to see the large caps move impulsively lower, then you get a breakdown below this level here. At this point, you may want to wait because we have a reaction low to see that go. But I think it'll happen. I think if we break below 154.32 again, which is that sideways trading range, this is where I posted at that point in time that 156.56 was my max upside bounce target. We hit it, and then have been trading sideways. We had one little kind of quirky topping, selling or buying climax candle above it, but a lot of reactions on that 156.56 max bounce target since. And that's what we're looking at here. So as I did in the update this morning, this sucker could break that way, or it could break that way. If it breaks to the downside, I've modified this target. I moved this trend line down to come in and better capture these reactions right here that I'm showing you. So that now, I had it a little bit higher before. It was actually my upside. It was a resistance level before, whatever that number was, 151 and change. I just wanted to point out this now is my target for the next sell signal if it comes to the downside of break of this channel in IWM. That's a 150.80, and that would give us from the point of the breakdown, or from where the bottom of the channel is, that's about a 2.25% drop right there. That's IWM for you. All right, next up, Treasury bonds. I've been watching Treasuries for a while. This is TLT. I'll show you the daily chart. We put in this divergent high, negative divergence on the daily chart. Looking for a reversal, and actually been short for a little while myself on Treasuries, and thrown out TLT and or TBT as unofficial trade ideas, and I may add those soon. There's some things giving me pause. One of those would be if the stock market does correct, if these divergences play out, and we get that break below 7,900 on NQ, you're going to have a falling stock market, which usually, but not always, but often gives a bid to Treasury bonds. So that's one thing giving me pause right now. But there are times, in fact, lately they've been moving pretty highly correlated, meaning Treasury bonds and stocks have been going up together for a good part of this year. And so, whereas normally they tend to trade inversely. But the bigger picture, if you're new to the website, that's why I just want to update this. This was my long-term outlook. I have this trend line here. We had this divergent low, and this is where I was, bullish and long Treasuries, both, primarily in my long-term investing accounts, and we had official trades on the site going back last fall when the stock market was going down. And so throughout all that rally up until there, most of that I was bullish and long, and I had a target. Dual targets. I said target would be either 128.56 or this uptrend line, and that was way back here before we even broke out. So we took out the 128.56, but we hit the uptrend line. So far we reversed. So that's a back test of the uptrend line, and this is a weekly chart, keep in mind. So I think we come on back there to that 128.56 and or uptrend line there, intersecting level, and ultimately we could break down and see a lot more downside in Treasuries, I believe. So there's the daily chart. Zoom down to the 60-minute chart. You can see we had this uptrend line. We had a divergent high on the 60-minute chart as well. breakdown, and we rallied back to this 131.62 resistance. You can see all the reactions along that line right there. And the futures looks even better. That's my preferred trading proxy. This is what I have short on ZB. And ZB actually offers another objective short entry here, I think, right now. Again, this could be foiled if the stock market starts to go down impulsively. You know, treasuries might catch another bid and pop above here. But as far as objective, you know, I can't ever promise any trade will work out, but I can show you where I believe that objective levels are to add short, you know, or long, whatever trades, long trade entries, whether it's long or short, I'm trying to say. Or, you know, add to a position that you have, and also exit positions. So I can tell you right now, this looks like an objective short entry. Why? Well, we had, you know, ZB, the 30-year bond futures, topped. We had this divergent high right here. Just imagine that's a line tool, not an arrow tool. From there, we had an impulsive move down, hit that 154, 151 target slash support, danced on a little, and then finally broke it. And we then took out this uptrend line right here, and we came and hit my 153.068 support level. That's a pretty big, pretty important support level. We've had just a few brief whipsaw dips below it, but it is a big level. It's pretty thin down below that if we break it. So I view every trade as, you know, I look at the risk reward and I say you're shorting a back test of a trend line plus a bounce back into resistance. And so that's objective with a stop somewhat above. Somewhat can be, you know, quite a bit higher. You might want to even put it above the recent highs. If you're targeting, I'll show you where I think Treasuries ZB may end up, or will likely end up going. First of all, that's an objective short entry, but not a sell signal. The next objective short entry would be a sell signal also, which would be a break, a solid break below these recent lows. We've already dipped below there a few times, although I think the resistance level is that 153.068 level. You want to be safe, wait for a break of those recent lows. That'll have taken out that reaction low as well. That would, I believe, open the door for a quick move down. I see very little resistance or support, until the 150.049 level, which also comes in nice with this uptrend line. So I have intersecting support levels. I would put that as a high probability target if that level is broken, meaning I have a high degree of confidence that that level would be hit if this is taken out. And ultimately, I could see the possibility and even likelihood that we bounce and then come on down here to this next target here, support about 145.217. That'd be a big move in treasuries. If you're swing trading ZB, that would be, sure, I don't have to measure it out, probably well over 10 grand in profits on per contract. But again, that's due to the leverage factor. You know, if you're trading TLT, you know, let's put it in percentage terms, move down to there would be only about, about 4%, and you have to consider how much you want to put in there. I always say this, that treasury bonds, because they're much less volatile and risky than stocks, you can take a much larger position size. So usually if I were to trade TLT, I'll take 2-3 times what I might normally on SPY or QQQ. And of course, I mentioned in recent weeks I've been highlighting TBT as an unofficial trade idea. I even gave you targets and stops back here. It's rallied up since then. The stop was set. It's still not an active trade, but there's targets of first target being the downtrend line. And I want to actually show you this now too. I should add a resistance level now. We have it right here. That should have been a line added before. So it kind of jives with what I was showing you before. If we break those recent lows in TLT and ZB, then we'll also break out, because TBT is TLT in reverse. I'm probably confusing you now. This is the inverse, short Treasury bond ETF, whereas TLT is a long one time. So that's what that would look like. You can go long here and or add on a breakout above that the recent highs on TBT, about 30.29. First target be the downtrend line, and next stop up here, third target right there, and a potential target all the way up here depending on how things play out. So that's enough on that. Let's look at silver. Silver's a big one today. And recently, silver's starting to play that game of catch-up I talked about to gold. Again, I don't want to get too much into depth in this video. It'll go on forever. So just check out, if you're a new member of the site, go to the home page here. Go like this. Let me drag up thing over here. Go to resources. There's two ways to find analysis on gold and silver. If you're a silver member, you can go here to market analysis, silver or gold member, click on gold and commodities, and you're going to see all the posts that are related to gold and commodities in there. You can also pull up things by particular symbol tag. And again, this is for gold and silver members. If you type in SLV, for example, that is the ETF for silver. That'll load those posts. Now if you're a gold member, you can use the go into the trading room, and you can see the additional posts and things that I might post. Let's say, what is it, we'll do SLV again, and that's going to show you any mentions of silver that were also, or that ETF, that ticker, or whatever term you're searching for in the trading room, and that'll show up here. So again, gold members can access that. So sometimes you'll get a little bit extra analysis and charts and things like that in there. Okay, so again, I laid out the reasons, and and showed you the charts that gold had a big rally for most of the year, and silver has lagged behind, and there it is. So this is the big chart to me. This is our weekly chart. Weekly chart of silver. It spans 10 years. This is a downtrend line that focused on recently. You can see it coming in there, and there's today. Well, I should say it's a weekly candle, but remember, when trading a weekly chart, all that matters is your end of week close. Today's only Wednesday. There's 2 more days after today left in this week, but I suspect that by all accounts this looks legit. I think it's pretty clear we're seeing a lot of money now coming into the silver mining stocks and gold. Gold's starting to perk up again. I'm still, believe me, don't get me wrong, I'm still very much longer term bullish on gold. That hasn't changed. Like I said, I think the opportunities lie right now because I'm favoring silver and the silver mining stocks to outperform in the near term. And so what I was getting at here on the weekly chart, if we can hold or build on these gains, that will be a solid and impulsive breakout above the downtrend line, as well as that 1470 resistance level. Next target up here at 1521, and then 1634. I'm sorry, give or take. That's a rough estimate there. But you get more bang for your buck, as I always say, trading the miners. The miners are simply a leveraged trade on gold. I did silver today. It was 6 to 1, half dozen to the other. I did that's not it. I did SIL. J, the juniors. I like a lot of the components in here. I went through the charts. Like your kids almost. You gotta love them all. A lot of these silver mining stocks. The charts look really good. But I highlighted a few of my favorites, so at least my top 4 picks, and then some of the other ones that really stood out. Now this one's already hit. I meant to add to the chart. I don't know if I mentioned it in the post when I added this official trade today, that I also, in addition to the price targets, which are adjusted, that's the thing. On official trades, if you see T1, T2, that means it's an adjusted target. What I mean by that, I always set my price targets on longs a little bit below the actual resistance level. That's 974. You can see the pop-up box down below. 974 is where that line is, so I have the target a little bit below because I don't want to hold out for every last penny in case the sellers step in early. However, I did list levels that are other resistance levels that very well may come in. And in fact, I expect them to come into play as a resistance. I expect a reaction here, and it could be a pretty solid reaction that sends us back. So I believe I mentioned, I'll have to check it, that you can use these levels as price targets because it's very possible silver could reverse here. But I'm looking at this one. If we're breaking out on the weekly chart, I'll say this. There are times, and I will do it, and maybe I'll do it today. I have silver futures. Maybe I'll try to game a little pullback if I see something in the charts because I'm a very active trader. But I have core holdings, and at this point in time, I think it's best probably just sit tight. We have what looks like a pretty impulsive breakout. What I mean by that, besides, it's pretty apparent. This is impulsive price action right here. These 2 big green candles that are near vertical, near vertical pop. I'm trying to get a box tool there, right there. The last 2 days, right up through the trend line here on silver. We broke out of the daily trend line yesterday on SILJ and follow through today. And look at these volume bars. This is the highest volume. Here's the top of the volume bar. we've seen in years by far. It dwarfs the other volume. So things are looking good right now. From a scale 1 to 10, this breakout is about a 10. You can't ask for much more. High volume, impulsive breakout yesterday, followed by more upside today. That's why I added the trade today, and it's come up now. I want to just say that we've hit the first target. May or may not get a reaction. But at this point, early in a breakout, I don't care to try to get cute and game a pullback by shorting or closing out my long positions. I'm just going to sit tight. I just want to share that with you guys in case you are looking for additional levels to micromanage a trade. What does that mean? Maybe you want to enter. Maybe you didn't take that trade yet. You just, you're at work. You get home tonight. You listen to this video. Well, at this point in time, to add it with the resistance at 948, it's at 947 right now. It overshot it by a hair and stopped so far. You want to see that level get taken out. So maybe a little consolidation here. Then a breakout, an impulsive break above 948 opens the door for a move up to that next target. And then the 1018-ish level, remember that is the actual resistance level. So if you're targeting 1018, maybe sell 1014 or something like that. And then these are the other targets. And again, if if these pan out, I may flip over then to this weekly chart to add additional targets, because this is what it looks like on the weekly chart. We had the breakout right here before in silver from that downtrend line, and the SILJ, I should say, the junior miners ETFs. And just from the point of the breakout, they ran another 266%. So I could easily see myself adding targets here if I like what I see, if the charts of gold and silver and the US dollar, or I should say more the euro, I want to see the dollar going down. If all that continues to firm up, you will likely see that additional targets. I wanted to say that because I added this as both a swing trade and a long-term trade. And if you're not sure what the difference is, go to the trade idea categories. There's descriptions for each trade at the top. When you go to trade ideas, you go to long-term trades right here, and you will see right here, long-term trades are trade investment ideas that have the potential for significant returns over a longer period of time, typically several months or more, blah, blah, blah. So those are your trend trades or investments, you can call them as well. And that's where I'm looking at a lot of these mining stocks here. All right, so while I'm on that, again, it was almost a coin toss between SLIJ, which is a little more aggressive because it's your junior miner stocks, or SIL, 6 to 1/2 dozen of the other. I did a extensive video on this recently, showed you the levels. You have a very solid and clean breakout of that trend line I showed in the video yesterday here on silver now. This is today's candlestick. I don't know why I can't grab a circle tool. There it is. That is an impulsive candle. And this is a weekly chart. So far, we're only halfway through the week, and volume is very good so far. So there's a breakout in the silver miners ETF, SIL. Those are a little bit larger cap companies, larger in capitalization, I should say, large caps. And we're coming up right now to my first target already, which is 28.27. So I guess kind of the takeaway as I'm doing this video is it's happened so fast since this morning. It's a pretty big rally. We're already approaching the first target where I think a reaction is very likely on silver. Right there, that's a pretty decent resistance level. There's a little more upside before that target's hit on SIL, the silver miners ETF. We could blast through it, but odds favor at least a minor reaction off that level. And if you get it, maybe you get a pullback somewhere to that reaction high. That would be another objective entry to add for a a long swing trade up to that next target about 30.13. Also a solid break above 28.27, but I need to throw a little asterisk in there, a little caveat. If we break 28.27 today or tomorrow, it would be what I call a momentum fueled overshoot. As I said, we could break and keep going, but when you have this near vertical rally like this on these big moves, it is more than common. In fact, I would almost expect an overshoot of that level. So say we go to 28.40 or 28.35 or so, and then come back in and then consolidate on the level. So I just wanted to say that there's a lot that goes into trading. It's not as simple as me saying, okay, any move now over 28.27 is a breakout, and that will open the door to 30.13. It would if we pull back first and consolidate and build up the energy, work off the overbought conditions, and then break on through there, that would likely be a pretty solid buy trigger. But as of now, like I said, we're either going to punch through it and keep going, or we may overshoot it. Even if we do, then come back to hold around that level and consolidate for a bit. So hopefully that makes sense. And yes, gold still looks good. Gold's, consolidating and has been above that. I had that 130 target. We overshot it and we came back in. So there's an example of a momentum fueled overshoot. We overshot my 130 target, came back in, did a near back test of it, and we've been consolidating since and helping to work off the near-term overbought conditions. And I just kind of foiled it here. I had drawn in the recent videos a pennant type pattern, like a bullish pennant pattern that may come into play. But either way, like I said, and let's see, gold is up. What is gold up? 1.31 today. Silver's up 2.41. So there's my, what I had talked about, expecting silver to play a game of catch up and outperform. And again, you can certainly see it on the ETFs today. SILJ, the junior silver miners, is up almost 5%. GDXJ, the junior gold miners, is up 3.38. Next up, I wanted to talk about IYT, the transportation sector. There was some buzz. Some people brought that up in the trading room. And there, and somebody, there's been actually a couple posts within the trading room on this, talking about the Dow theory, how the transports aren't confirming the move in the industrials. And some people say that's old and outdated, but still, and others don't. Others think it's valid. Either way, it's just, the point is, it's one of many, many sectors out there. In fact, the majority of the sectors that are not making new highs with the stock market. It's tech. It's the FANG stocks and a couple, other sectors, but it's mostly the big tech stocks that are lifting the market's new highs. And again, that's reflected in those numbers. I did a video a couple weeks back on breadth indicators, showing you the declining breadth, the divergences between the stock market prices and breadth, the number of stocks making new highs. And this just shows you. And this is, again, you can go through it yourself. Pick as many sectors as you want. Go and look at and see how many are trading at new highs along with the stock market. You'll see that they're not. So, and look, these red flags that's been going on for a while, and it can continue for some time. So it is far from a timing indicator. It's not a sell signal. It's just a red flag at this point in time. But I think I wanted to update this because I did a video a little under a month ago. That's you can, here, let me find it for you. Hold on. Okay, again, come into under resources, right side of the chart, support center. Pull that post by ticker, type in IYT, that'll give you the transportation sector, and you can see everything related to the transportation sector. So on July 20th, that makes no sense, that was last year, where is it? Would have been in one of these here. Aha, I had to type in, because I didn't cover IYT, I did oh yeah, there it is. Okay, February. So we had transportation sector. Where was the railroads? Oh, you know what? They were okay. My mistake. They were wrapped into this one right here. There they are. Bunch of railroads right here, covered recently. In fact, these are all. You'll see quite a few railroads back here. And so I laid out a scenario. A lot of these stocks looked like they were breaking down or poised to break down. In fact, type in railroads. Pull up this sector here. I get a watch list. It's going to load on another page. Okay, so here's the sector itself. I'll show you. So I pointed out this bearish rising wedge back here, showed these as short setups. They did break down. They had the initial leg down, and what they did is they made a slightly marginal new high. Higher high. I'm going to show you some trend lines I'm drawing here, and they still very much, that new high was again an extension of the divergences. So it's not like that's a bullish high. Like I say, breakouts to new highs that occur with negative divergences and overbought have a much, much, much higher rate of failure. And it's a wash, rinse, repeat thing too. You can see, divergent high right here, clean negative divergence there on the railroads. You can see a nice little uptrend line, bearish rising wedge. Boom, these stocks got nailed. This time they broke down. It wasn't an immediate down like this, but they went in, pushed up, made a marginal new high, and again you can see that they're breaking down today. And I want to go over some of those big names, and this is what's putting a drag on the transportation sector. UNP, There's the breakdown. In fact, that one, if you shorted it back then when it was covered as a trade idea on the break, it never went negative. It's right. It came right about back to the breakdown point there, and that's resistance. And now moving impulsively lower today. So you may want to revisit those videos, but the targets be the same. NSC, and these are down big. This is 6.5%. Something's going on there with the railroad stocks. But again, it was technically based. It's just, this is like the stock market. I think it was a delayed. You had the breakdown. Everything was indicating a pretty good correction here, just like back here. But the market received a stay of execution a la Jerome Powell. That's what happened here, in my opinion. And so the technicals will play out. It was just, I think it's a deferred breakdown, and we're starting to now. My point of doing this is seeing some impulsive moves lower today, and which is probably kicking off the next big leg down here in the miners. I'm sorry, in the railroads. And this one hasn't yet broke. You can see since my last update, all we did is simply extend the wedge. It worked higher, made another thrust up within the rising wedge. The divergences that were intact then are still intact. So here's one pending a sell signal and a break of this trend line, and I would say minimum target on this one. A couple stops along the way, but I think it's coming back down to at least these levels here. So CSX taking it on the chin today. This one's definitely coming off the tracks. Big move down today. You know, do you short a 10% drop? Probably not, but you know, at this point in time, you know, the objective entry was there on the breakdown. At this point, you probably just sit tight if you're already short that one. So I just wanted to point these out, and they are potential trading ops or updates if you're already short the railroads. Nat gas, oh, what a tradable little sucker at times. Sometimes I just stand aside, the charts aren't clear, you just, you know, stay out of this one. But other times this is, it's very tradable, meaning works well to the technicals. Plus the gains are just so oversized because natural gas is such a volatile commodity. So you had this divergent low, been bullish and long through most of that. Then we had this divergent high. We have on-off, a lot of unofficial. Most of the unofficial trades on this or anything else, of course, are posted in the trading room. I post pretty frequent updates on natural gas there, and that's the big levels. So we had the rising wedge. It was time to get out. Broke down, back tested. That's where we shorted via DGAS the other day. We covered right here, hit that, and then it went on, hit my final target. That's where I reversed. I posted this morning. We were back testing there, came back tested one more time, and boom, that's it. So that was a good time to take profits. It was just a quick bounce trade. It turned out to be. What I did is I ratcheted, moved my stops up real tight, got taken out when it started to jog down. And had it continued up through there, I would have taken profits just shy of that 388 level, but got out for quick trade today. And now look, it's already back down, so it's at support again. In fact, I'll have to take a look at that. That may be another objective entry, but that's kind of weak, showing you that we had a pretty muted bounce and we're already back down to that support now. So I may re-enter this one now. I can tell you it's objective because you're at support again with a stop not too far below. Just don't give it a lot of room. And if you're not used to trading natural gas or trading at all, this thing can kill you, or any trade, but especially those that can move really fast. This thing can go up double digits in a day. I've seen it do that many times. And if you are on the wrong side of the trade, especially if you're using leverage like DGAS or UGAS, and you're not on top of your stops, this thing will eat you alive. So be careful when trading volatile securities like natural gas. And on a related note, crude, I also mentioned this one along with natural gas on Friday. I made that one an official trade. I made crude an unofficial trade. 6 to 1, half dozen to the other. I almost put on this official trade, but it was a beautiful chart. CL crude futures pushed right up here, and we had the same thing on USO, bearish rising wedge with a bullish falling wedge on DWT. I covered that extensively and recently, so I'm not going to get into the charts of USO and DWT, but it played out really nice. That's where I mentioned it's a short, came on, went on, hit the trend line, the bottom of the wedge, then broke down impulsively. Yesterday, as I was doing the video, I noticed this level here, 58.28, which we were at, and I said, you know what, that's probably a level we may get a reaction, and we certainly did. I added that line, bounced right up to the next resistance level that I had in those previous charts, including yesterday's video, 58.24, bingo, reverse from there, and we are on our way to that next target at 56.34. That's where it looks like we're going from here. Okay, somebody asked me about wheat today. If I'm still longer term bullish, yes, as long as it remains above the recent lows. Wheat and coffee. I'll get to coffee. I know this is a long video, but again, I want to kind of get all this stuff out there. This one, yeah, it's not, right now there's not any strong buy signals, but what it's done is fallen back to the support here, about 498. You can see there, hitting some pretty decent support with really a support zone down to about 492. So as long as it remains above 492, I would almost venture to guess, looking at this chart, just kind of getting a read on it, that we're probably going to jog down, undercut the recent lows, get a little washout move, clear out, hit the stops on the longs, suck in some shorts, come down here, make a run at or slightly below that 492 level, then reverse. That will extend these existing positive divergences that are already in place. It will certainly not take them out unless we went a lot lower. So that, to make it very simple, that would be the next buy zone. Anywhere really from where we're at now down to about this level. Much below that, again, anything more than just a brief whipsaw down through there starts to really chip away, and then I'm not so hot on wheat. But as of now, I still favor, after this consolidation period. Remember, we put in a divergent high, we're overbought, we had a heck of a run, and it needed to work off those overbought conditions. So that's what that's my preferred scenario for wheat. And that's ZW Wheat Futures, of course. You're new to the site. We had a official trade recently on WEAT, that's the wheat ETN. Same story here. You can see this chart kind of meshes with what I just showed you on wheat futures. I really want to see the recent lows right here hold with nothing more than just a brief overshoot if we get it, and that could open the door for the next leg higher. Coffee is still an active trade because I have it's a long-term trade as well as a swing trade. So, in swing trading, when we hit these levels, I told you both times I expected a pullback. That's the difference. An active swing trader can micromanage a longer-term trend trade. That's what this one's doing. It's working our way up so far. We appear to be, we're in an uptrend. We'll see if we get another new high. We can keep that uptrend intact, hit the final target. But you can see we pulled back to the former, just messed that line up, former T2 level right there was hit. And kind of the same story on Joe, which are coffee futures. Let me give you the futures chart for you that trade futures. And remember, I always watch the futures charts because that's what the ETNs are trading. They're investing in the futures. Here it is, KC. KC has hit this level and has been dancing on it. So you can see it's a reaction high right there, reaction from below right there, reaction from above right there, reactions right there, and a lot of reactions here. So that 105.34-ish level is pretty significant, and I really want to see that hold. If it does hold, and this consolidation has helped to work off the overbought conditions, that would set the stage for the next thrust up and ultimately a breakout. This was a key swing target that I had for coffee futures, where I reverse that trade from long to short, and then are actually cashed out there, and I can't remember where maybe after the break of the trend line or just before it, but 116 is a pretty significant resistance level for coffee. And if we run up there again, I suspect whether we have a little consolidation or pullback first, I suspect we'll break it and then have the next leg higher, the next big leg higher in coffee, just like these first two. Netflix reports tonight. I mentioned it as an unofficial trade idea only because the earnings report was coming up, but we shorted it here officially there, I think officially there as well, and unofficially these bounces. So it's been every bounce up to 380, 381, and I just mentioned again recently there a wash, rinse, repeat scenario if I've ever seen one. So so far it's down pretty nice from 383 all the way to 364, but they report tonight, so this can go either way. After the earnings are out of the way, if it doesn't have a huge gap down, I probably wouldn't add it as a long, but if it pops above that level, there'll be some short covering for sure. We'll watch this one. I'll update it later. I just wanted to say, if you're in it, just sit tight, strap on your seatbelt, because this stock is a gappy little sucker. About the only guarantee I'll give you is that it will gap up or down tomorrow. It's not going to open flat. This thing tends to gap pretty big after earnings, so, and hence the reason it's not an official trade. I'll just wrap it up here. I could go on and on. There's a lot of trade ideas. PAYX, I've had quite a few inquiries because that's an official trade, and I updated it yesterday. It rallied right back to our entry price, which was support. That's why we shorted it there on a break of the horizontal support and the trend line. It broke the trend line first, but I wanted to see that $86 support level go. So I set an entry at 85.98, 2 cents below. Boom, started to play out nice. It's come back tested, but so far it's failed to get through that level. So it's still offering an objective entry, and earnings are out of the way on this one. So ideally now we need to see it turn down, and ideally not go much above the $86 level, especially on a closing basis. So you can short it here. Like I said, it's still an objective entry anytime on any pushback to 86. And what you want to see now, ideally, again, start to roll back over, get away from that level, and start to see some big red candles. Start to see the selling increase or accelerate, and then that should take us down to at least my first target there, about 78.18. And those are the additional targets. Okay, long video, but a lot of stuff for you guys to focus on, trade, and if I have some other trade, I may do another one of these. Probably do one tomorrow or later today. We'll wrap this one up here. This has been Randy Finney with Right Side.